Welcome to the Traders Market Intelligence Report brought to you by WealthBuildersHQ.com. This update is for Monday, February 9th, 2026. Hope you're having a great day. I hope it's been a great trading day for you. As we get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. This is our upcoming economic reports for next week. We got a lot of 8:30 a.m. reports. We've got nothing coming out that's red or orange next week. That is during market hours, so they all get a rank of 2 because they're all pre-market, so I don't really care because unless I'm trading futures, I'm not too concerned with it. What I am concerned with is what's going on with the market. Looky here. Look at the S&P 500 up 134 points today. Woo! What a move. Whoops, I did it again. Now, granted, there was a lot of pain and suffering traders went through for the last couple of days, right? Big move down here on Tuesday. We opened about a little bit higher on Wednesday. Big move down on Wednesday. Came back. Gap and drop yesterday. Below our fib line. Below the wick had gone lower than our previous swing low. So we chipped away at the ice there. And we do officially have a new swing low at this point. Right there. But overall, the bearishness was in. Today, we get a rebound. Things are better. Tech stocks were leading. Gold and silver prices were up. Oil rebounded. It seemed that everything came back in swing a little bit. And we had a massive move today. Gap fill, fixed, taken care of, done, nothing to worry about. And now what happened? We were in bearish. You hearing me? Bearish bias yesterday. And where are we now? We're bullish. Oh, but Rob, we're a rank of 3, but we're bullish. We went in one day, one fell swoop, all the way back up. Considering we move 75 points a day, today was almost double what the average one-day move is on the S&P 500 for the last 13 days on average, 13 trading days. So I'm very pleased with where we are. The 8 will cross up on Monday, even if we stay flat on price. The 8's going to cross up on Monday just from the momentum of today. No ifs, ands, or buts. If we go down, it may stay where it is, but we'll see how it all lands out. But I love what we're looking at here. What a move. So downside, we're looking at that 69.03, 8 and 21 confluence, which means, think of a floor made out of plywood. It's strong. Could you break through it? Yeah, I can cut it with a saw. I can hit it with a sledgehammer a couple of times. I'll start to chip away at it without a doubt. Well, now I got a piece of 3/4 inch plywood. There's my Fibonacci. I've got a piece of 3/4 inch plywood. There's the 8 moving average. I've got another piece of 3/4 inch plywood as the 21 moving average. Can I break it? Yeah. Is it a lot harder? Oh, hell yeah. It's a lot harder to break, right? There's a lot stronger floor right now in that overall move. Now, one of the key things to keep in mind is this. We're going to look at a very short-term move here. And I'm going to grab a fib, come from this swing high, and draw to the swing low right here. And pull it out to the right. Whoop. Let's fix that first. One more shot. Okay, right there. So guys, here's the thing. If we look at that short move that took place starting on, if you want to draw them yourselves, I don't know why I'm not seeing dates there. My dates are gone. All right, so it's up in the corner. So January 28th. So on January 28th until yesterday, which was February 5th. That fib, that moved down 1, 2, 3, 4, 5, 6, 7 trading days down, today up, right? So 8 days in total. That move up has blown through the 50 and the 618 and gotten up near the 764. So we may see a short-term reversal, a Fibonacci 4-step trade set up, come off of the 69.50 level, back down to the 69.18 level. Very possible, right? After the move we had on Monday, do we get a woo? Maybe that was fast. We need to slow it down and back up a little bit. Maybe. Do we get a continuation? Maybe. I don't have the answer yet. Obviously, we'll play it by ear, but I like what I see. There's a lot of strength down there at that level. And again, this 618 is new. It's not It's not the actual fib of what we're working off of. It's down here, okay? To my upside, we've got our 69.56 level. That's our upside target. And then, the all-time high. I mean, that's how close we are to it right there. 7,002.28. That's how freaking close we are. So what do we have there? I've got a 7,000 level. I've got a 7,002. And I've got 7,007. So there's a very strong area, resistance up above head. There's a very strong support down below. Does it mean we can't break through? No, it doesn't. But we've got very good zones to work off of, both up and down. And the reason I'm saying a zone, not a zone like Brandon will talk about with his zones. I'm talking about it where you've got a fib line, an 8, and a 21. That's the zone. On the upside, you've got a 1,000-point level, the all-time high, and the next fib line, which I think is a negative 272. Right? You've got a lot in there. Now, is there an obstacle course in the way? Yep, you've got this 618 right in the middle. So that's our first stopping point, is right there. And then this zone. If we stretch into it just like we did here, I'd be tickled pink. Pull up, break down, push back out of it, retest and bounce. And then from there, our next stop is 70.49. 70.50 if you want to make it easier. We've got a lot of opportunities right now. Market is strong. There was so much panic and blood in the streets and people sell. Hopefully, if you were looking for a place to enter into things like Bitcoin and gold and silver, hopefully you're able to capitalize on those. If we look at VIX, fear, right? Fear's down. This was yesterday. And today was whoosh. Gap down, we went up a little bit. That's just the overreaction from the gap being too big of a gap today. Right, that gap today was just, the gap down today was an overreaction from here down to here, and then it moved back up a little. That's fine. A little bit of fix it, I don't really care. But overall, looking very, very, very sweet. We're in low for our VIX right now. So volatilities were still a bit high today, because of some of the overall movement. You know, the concern, was it real? Were we going to see sell-offs at the end of the day from after people got some money back, which we didn't. We saw a little bit, but not crazily where we could have had, right? We had a little bit of movement at the end of the day. If we look at S&P 500 on a 5-minute, right? Very little, right? We ran right into the close, and the last 5 minutes was just, you know, covering. That's all it was. It's all covering right there. Closing out, getting done for the weekend, locking it up, and calling it a day. So with that, everyone, be prepared, be cautious, be focused when looking at the S&P 500. The biggest advice I can give you is the S&P right now is bullish. 70 to 80% of all stocks move in the direction of the S&P 500. So my tip to you, my help to you to protect yourself, especially if you're a newer trader, only trade in the direction of the S&P 500. If you do that, 70 to 80% of all stocks move that direction. Why are you going to fight it? If you're an experienced trader and you understand trading against the market, trading against the grain, whatever you want to talk about, against the trend, I have no problem with that. If you're a newer trader, stick to the damn direction of the market. Just stick to the direction of the market. Well, what if it doesn't go my direction? Don't trade. You don't have to trade every day. Yeah, but I'm going to miss out on it. Yeah, it's going to be another trade the next day. Don't worry about it. There's plenty of trades every single day. Right now, learn the patience required to be an effective trader. So with that, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, from my heart, folks, you're only just one trade away. With that, have a great weekend, and I will see you at our next update. Bye for now.